I don't think people grasp that like Bitcoin is basically as valuable as all the silver in the world. There will be monetary credit events where people turn to Bitcoin like they turn to gold. We will go through booms and busts in Bitcoin. There's no doubt still. Crypto's gone through this so many times with these hype cycles, but even with everything you've ever heard, all the hype, and even how flawed the metric is, the Bitcoin dominance is still, what, 58% as of today? Bitcoin yet keeps making new all-time highs. Bitcoin is still king.
Hello, people. Welcome to the Byte Federal Podcast. My guest today is Alex Thorn. Alex, how are you doing?
I'm great, Paul. Thanks for having me. Happy to be here.
My pleasure. I'm happy that you were willing to come on and chat with us. Before we get started, maybe you can just quickly give our listeners a background story. I know you were with Fidelity and now head of research at Galaxy Digital, but maybe tell us how that journey took shape and where along that path you found Bitcoin.
Oh man, yeah, it's been a long time. I've been into Bitcoin personally since about 2012 or 2013. It was late 2012, early 2013. Not really a true believer until a little bit later, maybe like 2015. But yeah, I'm head of research at Galaxy. I could talk about that in a second. I joined Galaxy though in the end of 2020. So going on 5 years, I've been at Galaxy. I was at Fidelity for 12 years before that. The tail, sort of the last half of that, working on Bitcoin and crypto at Fidelity. So I was director of blockchain research at Fidelity Center for Applied Technology, which is like the labs organization at Fidelity. I also co-managed and started Avon Ventures, which was Fidelity's ownership's affiliated crypto VC fund, and we did a lot of Bitcoin investing in there. Had a whole prior career mostly in legal and compliance at Fidelity before that, but I would say I've been interested in Bitcoin specifically, and I am interested in the rest of crypto and even in blockchain technology. Although I don't think outside of Bitcoin and a few other things, it's really delivered much to the world yet. I've been following and researching it and been into it for years now. I mean, more than 10 years. So, and I think it's safe to say I've been working full time on Bitcoin or blockchain, starting at Fidelity now for 8 years. So since 2017, really, I think is when I've been working on full time.
So Fidelity,
a lot has happened.
Yeah, and Fidelity was, that always kind of impressed me that Fidelity was like the first big broker dealer to really take this space seriously. So you went from compliance and regulation into blockchain research. How does that happen?
Yeah, that's a good question. Yeah, Fidelity was early, continues to be a big leader and a sort of pioneer in the space. I think part of that is driven by the fact that it's privately held. I mean, people don't realize this. Fidelity Investments is a private company, mostly owned by the Johnson family, of which Abigail Johnson is the leader of the family and the chairman and CEO of the company, right? So she and her father and grandfather before her were always very interested in technology. I think Fidelity was the first firm to have a website and the first to have like a 1-800 Fidelity number. They sort of pioneered check writing on mutual fund accounts and a bunch of other things, right? It's always been a very technology forward company. That's a lot easier when you're private, right? Because you don't have to answer to a quarterly shareholder, earnings call while you're spending all this money on innovation when you could be like buying your stock back or whatever else, right? I've always thought that was part of the reason. Obviously, it's driven by their own interest in technology. And at Fidelity, when it came to Bitcoin, this was something that Abby pushed down from the top. This was not, as in many big firms, someone in the middle management or even a junior employee trying to shill up to the top. This actually was very much from the top down. It had its challenges implementing it across her organization, getting the rest of the organization to be as interested in it as Abby was. But nonetheless, she deserves a lot of credit for herself being personally interested, directing people to look into it. Some of those early people, like Matt Walsh, who now co-founded Castle Island Ventures, was one of the earliest people that he worked in Fidelity Consulting at the time, and he was among the early people that was tasked with like look into this Bitcoin thing. And one of the things that they did was look around the firm and say, hey, who knows about this Bitcoin thing? Because we're looking into it. We want to talk to people who know about it. And I was one of the people they found. I was working in the legal department, running e-discovery, which is like forensic investigation for legal cases. And I had apparently talked people's ears off around the whole company. In that role, it's a centralized legal function. So I had worked on cases that touched every part of the company. So I knew a lot about Fidelity broadly, much more so than, someone whose job was, in a focused business process for one thing, right? My job was to go around the entire company, right? And find evidence and talk to people and gather and investigate, right? So apparently in the years prior to this is probably like 2015 or so when they started reaching out around the firm to ask about Bitcoin. Apparently a lot of people pointed them to me. They said, you got to talk to Alex in legal. He's been talking our ear off about Bitcoin for years. And I realized they were starting a Bitcoin department, and basically it took me a little bit, but weaseled my way into a newly formed job called Director of Blockchain Research.
Cool.
So that's how it happened.
Kudos
Yeah.
to her to have that kind of foresight. I was always impressed. Like, they were the first firm early on to do significant research. A friend of mine whose family trust is there was telling me early on that he could get real Bitcoin in his account, and I know they were mining in 2014. So I mean, that's super impressive, and kudos to Fidelity for pulling that off. But so what was the catalyst that got you to Galaxy then?
Well, I've been at Fidelity a long time. I mean, I will say, like, there was it wasn't a rush to leave Fidelity or anything like that, I would say. But, you do look yourself in the mirror at some point and say, I've been at this company for the same company for 12 years. Like, is it going to be 12 more? Right. And like, it could have been great 12 more, to be clear. But I was like, at some point I'm like, should I just be looking at what else there is to do in life, right? Like I literally joined Fidelity right out of college. So like I've worked at exactly 2 companies in my entire career, and I'm not that young a guy. So like it's been a decently long career already. And so there was some of that, like, just like, should I be looking at doing something new? And this was like the end of 2020. This is a perfect time to go into the crypto industry, right? It was booming. We were just about to hit new Bitcoin all-time highs that December. We recrossed 20K from the 2017 high of like whatever that was, colloquially 20K. We hit in December 17. Well, in December 2020, we passed it. So it was a great time to look. There were tons of opportunities. The thing I liked about Galaxy was that Novogratz had a vision for an independent focused research team that could really build credibility and publish, not just marketing content for their company or his bags, but a credible research business. And I just thought that was super compelling. I had done research. I'd gone into investing. I was like, some people said to me, they were like, oh, are you really going to go back to research, as if it's a step backwards? And there is a view, like in Wall Street, like every equity research analyst wants to be a portfolio manager. Like it is a very common pathway from research into some form of investing. I've done that pathway. I mean, mine into venture investing, not into like public equities investing, but I just am I am a researcher at my core. I like to understand and explain things. I love to write. Even if I wasn't publishing publicly, I'd be writing for myself. Like, it helps me gather and my thoughts and make coherent arguments. I like to try arguments on for size. I have no problem. In fact, I revel in taking my opponent's position and seeing how good a job I can do arguing it. And so it's in my sort of fiber of my, I majored in political science and economics, and am a computer nerd by hobby, right? Like, I mean, my mom is a lawyer. My dad was an English professor. Like, I love to debate and learn and write, right? So like,
so you had a lot of training at the dinner table, I assume.
Yeah, I really did. And so it's not, it was never go back to research for me, because I love research. And I will say, I just don't particularly like the business of venture investing, doing it as your job. I mean, I think it's very tedious and negative, and really long-term payouts. They take a long time. So, but it really came down to the vision that Mike was going to let me build, which I worked very hard to build. And I believe we have built, which is a very credible, incredibly independent, and deeply thoughtful research division that covers, Bitcoin and crypto markets and technology and adoption and trends. And that's what we try to do. We do not write only about Bitcoin. Galaxy is a full service financial services institution. Like we trade and sell everything that our clients and trade and buy and sell, and we'll do a variety of things I can talk about if that's interesting. But for whatever our clients want that is legal in financial services in on chain, right? Like that's what we do. I mostly write about Bitcoin and policy, but we have we've 8 people on the research team now, and we cover everything from alternate L1 blockchains, scaling debates, layer 2s, Lightning, and Arc and other things on Bitcoin, but also like roll-ups on Ethereum, and like what the different strategies are for scaling a blockchain, what people are doing on blockchains. So we cover a lot of DeFi related stuff, because even today that's still mostly all people are doing on block. Like the only real applications that have usage are basically like stablecoins and DeFi. We haven't seen like Web3 social like pick up, but I promise you, if it did, we would write about it. So we try to focus on what is actually happening, what is important actually, right? Like who is buying and holding Bitcoin for what reason. Not we're not here to paint a rosy picture of the future. We are not venture investors writing a report to shill our 30-year vision of how tomatoes are going to be on a blockchain, right? But I promise you, if IBM actually ever and Maersk ever actually put those tomatoes on the blockchain and it matters, we'll explain why it matters.
Right. Awesome. So most of your clients then of that research are institutional clients?
Yes.
Okay.
So
is that 100% institutional, or do you guys put
Galaxy
out retail?
today only in general services high net worth or institutional clients, like today, right? We're not a crypto exchange for retail. We have some individual clients, sure, but they are typically high net worth or family offices, right?
Sure.
Our biggest trading client base is institutional investors. So that includes hedge funds, pensions, endowments, other types of funds. It includes high net worth individuals. It includes other corporates, right? Like so that's our general client base. Same thing on the asset management side. I mean, it is true. We have Galaxy Asset Management has retail accessible ETF products with Invesco, with State Street. But yes, we have historically been an institutional company trading crypto, investment bank, trading company.
Sure.
We have a variety of things. And so yes, our research is focused for an institutional or professional audience, right? We don't put out a lot of like 101s, right? And in fact, most of the way we do sort of a combo of long-term evergreen or long shelf life reports, and we do those, but it's not more than like 6 to 12 months of length, right? Like I'm not trying to write like how Bitcoin works. But we have some longer term stuff, sure, but and then a lot of like topical, like you are in the market, you need to understand catalysts that are coming, market related. Like, we want to put out research that is helpful for a market risk taker, I think, at our core.
Gotcha. So I got a question for you, because as our company is 100% retail focused, and throughout our history, we've gone from having just Bitcoin to 33 coins at our peak at one time, and in like 18, 19, and then back down to like several proof of work coins and some stable coins right in that mix. And regardless of all that, constantly 98% of what we sell to customers is Bitcoin, because that's what the customers are buying. How does that look like at the institutional level? Are you like you're doing all this research on all this potential? How much is leading to a really diversified approach by these institutional investors, or are they still focused primarily on Bitcoin?
It's a fantastic question. I don't know like the percentage, but I would bet a majority of Galaxy's flows are Bitcoin related. I don't know the current like updated whatever like actual numbers, but historically, despite doing a lot of other things in a lot of other on-chain environments, offering a lot of other assets, still, and this shouldn't be a surprise, like Bitcoin is still king. I mean, even with everything you've ever heard, all the hype, and even how flawed the metric is, the Bitcoin dominance is still 58% as of today. It's still more than half of the entire rest of the space combined, right? So that shouldn't surprise anyone. I would say from a pure institutional investor, keep in mind, like when I say institutions, a lot of who we're trading with are like active trading, intelligent market participants, not just like, old stodgy guys who like put in a percent. There are some of those too. Yeah, but like a huge part of our client base is other crypto funds, for example. Like those, they're trying to trade and make money, right? So like there's plenty of interesting, but if we take your question, Paul, more to mean like, pensions, endowments, very long-term investor types,
Mm-hmm.
I think it's still pretty much Bitcoin and then a couple others. And some might just do Bitcoin only. Some will do like 2/3 Bitcoin, 1/3 ETH, or you can just also look at like the Bitcoin ETF AUMs and flows versus the Ether AUM and flows, and it's just not close. And in fact, till this run that Ethereum has been on the last like 3 months or so, I mean, Bitcoin ETF flows were wiping the floor, like way above in a ratio than even the Bitcoin market cap to Ether market cap. Like it was
Mm-hmm.
Ethereum ETFs until basically May were underperforming Bitcoin ETFs, even relative to its much smaller market cap.
Right.
It's just recently that Ethereum and in Ethereum's defense, like I think 6 weeks in a row, starting in mid-July, Ether ETFs took in more than Bitcoin ETFs, which is astonishing given that, Bitcoin is, what, 3 or 4x its size, right? So like
Yeah.
I would
It's
say there is interest. I mean, most institutional long-term investors are not dogmatic about picking one asset. They're not invested
yeah.
in one stock. They're not invested in one asset. Sure, they're mostly picking Bitcoin still, but you absolutely see diversification into, the other big
Mm-hmm.
assets, the
Mm-hmm.
Ethereums, the Solanas, et cetera.
Right. You look at the world from all these regulatory perspectives. Obviously, you've got the Genius Act, the Clarity Act. You got the CFTC and the SEC now, uh, kind of trying to parse out who's going to regulate what. And this voice keeps telling us that we want to clean up this industry. We want to make it regulatory compliant and yada yada yada. But then at the same time, you see a Doge ETF that is linked to I believe it's linked to a derivatives market. It's not even spot Doge. And we all know the history of Doge. Like how does Wall Street justify this being like a legitimate ETF? Or am I
Well,
just seeing it wrong? I mean, to me, because it
surely
just sounds
Doge
like
isn't the worst one you can come up with, Paul. Surely
sure, it's
not.
just the most current one that I'm aware of.
Look, Dogecoin is a proof of work coin with no
Yeah,
pre-mine. It's a coin with no purpose. It's the original meme coin, but it
yeah,
it is a Bitcoin fork. I mean, in my mind, actually, not that I think I get your broader point, which I'll
yeah, yeah,
address, but
yeah.
just in particular, in fact, if people want to learn about Doge, go to dogmoney.info, which links to my fantastic 2021 paper about Dogecoin, where I called it the most honest shitcoin. That is the title of the paper. So I actually like Doge. I mean, not that I'm saying you should buy it or invest in it, and I don't currently own any Dogecoin, but I think that, but that's not even
I
that's
guess that
surely
yeah.
not.
I think you hit the nail on the head. Like, how does Wall Street find value in a meme coin?
I'm not sure it does, right? I mean, and that
Okay.
I think that's okay. Like you have a free market. This is the difference here. The SEC is not trying to make prescriptions about the quality of legal assets, right? And I think, how do we justify, XYZ company that's a really bad company? You don't justify it. You don't have to, agree with every company that lists on the Nasdaq that it's a good
Sure.
company for
Yeah.
to believe there should be a free market, right? And so I think there will be plenty of cryptos. There are plenty of cryptos, and there will be plenty of securitized wrappers for cryptos, whether it's ETFs or DATs or whatever, that are not looked upon fondly and don't broadly give a good, reputation to our industry. Like that's always
Sure.
true, right?
Yeah,
And
that's a good
I
point. That's a good point. As long as they're following a clear regulatory path to get to market, they're not breaking any laws, then the
that's
market will
my view.
decide whether it's valuable or not.
Yeah, I mean that's my view. I mean, if you ask me to recommend something and I think it's really bad, surely I'm not going to, right? But
Yeah.
like, um, I believe the market should clear this up. If somebody on our platform wants to, like, if an institutional investor wants to hold fart coin, like that's on them. Like if fart coin's legal, if it's legal to offer and
Yeah.
there's demand for it, then I don't see why even a Galaxy, for example, or any intermediary should be
Yeah.
prohibited or feel bad about offering,
Sure.
something that's legal in the market that people want.
Right.
Promoting something.
Pets.com was legal.
That's right. And by the way, And I don't think this is going to be the case for Doge or Fartcoin probably. But pets.com was totally a good idea. It exists today, basically.
Right.
Amazon does that, right? It
Yeah.
was
Yeah.
early.
It was just
I
early.
think there's a lot of stuff. Crypto's gone through this so many times with these hype cycles, but like oftentimes when there are bubbles in something, and there obviously have been crypto bubbles now and Bitcoin bubbles, there have been. I don't know of any bubble that, you know, tulips didn't have a second, third, and fourth bubble. Like, it says something that Bitcoin yet keeps making new all-time highs. It's surely there's something real there. I look at critics of Bitcoin today. Stephen Hanke, the professor, is a great example. He's still spouting the same things he said in 2014.
Yeah.
Surely something about your analysis must be off, Stephen, if Bitcoin came back and made new all-time highs like 6 more times, right? So I don't know that like those but so bubbles though often have there's something real there. There's some reason why people the US markets and US investors were not wrong to be excited about the internet in 1999. They were totally right? They just got a bit ahead of their skis. But now if you look, now you zoom out and look at that bubble, and it's a little blip on the market value that's been added to the US economy from all of the internet. I mean, it's hard to even just imagine life today. The internet is like oxygen. You can't live without it, right? We couldn't talk right now. I mean, remember that video of I think it was Bill Gates talking to like what's his face?
Was that like
the
Oprah
Late Show guy?
Oh, David Letterman.
Yeah, he was talking to Letterman, right? And he's like, yeah, you're gonna like listen to like radio on the internet, and Letterman's like, what are you talking about?
Yeah, exactly.
I mean, it's just so I
and
you
it's
know,
so
again,
that's so funny because I do that all the time. I actually was had just kind of started my finance career at Payne Weber during that era, and I remember just, since it was the first time I'd ever experienced anything like that, just going like, how the fuck are these 15-second cat videos that take 10 minutes to download ever going to be anything? Right. And so it's very easy to like, I look at crypto and a lot I'm very, I critique it pretty hard. There's a lot of 99% of what I've seen has just been garbage, but I can't deny the fact that somewhere, somehow, something will probably emerge out of this mess of garbage that is game changer.
Yeah. I mean, I can make a case for, I mentioned this at the top. I think there are for sure two that already have product market fit outside of Bitcoin, and it's stablecoins and DeFi, specifically lending and trading permissionlessly. My whole argument about DeFi, and one reason why we wanted to tokenize Galaxy stock, and why I really am big in trying to tokenize equity securities in particular, is that these things are great. Like, DeFi is really good. It's just that most of the assets suck. Like, they're, either, I mean, what are most of the assets? Either like the gas token for yet another L1 blockchain, right? Or some other useless token or whatever, or even scams and grifts and meme coins. Who knows, right? Not all of them are bad, to be clear. I mean, obviously, but like, if we could improve the quality of the assets that are on blockchains, then I think you'd see like DeFi in particular become essential to global markets.
I agree with that. I think and maybe you've already looked into this, but I saw recent announcements from Nasdaq that they're going to move to 24/5 trading. I would assume that's going to require stable coins and tokenization, because I think they were also talking about using blockchain for settlement. So to me, that sounds like T0 finally making that concept finally making it to the Nasdaq. So do you see that? Is that the future you see, where all the big exchanges are going to go tokenized, stable coins, which obviously is going to make the treasury happy, because if there's a trading pair on all these big exchanges that's a tokenized digital dollar, they're going to be selling a ton of treasuries. So how do you see this whole relationship forming? And am I painting a decent picture of that, or do you have a different view?
Yeah. No, I think you are. Look, again, my Bitcoin friends, and I am like at my core a Bitcoiner, to be clear, and I love Bitcoin, and I think it's the only crypto asset I own. But that people they're skeptical, and I get it, because there's been a lot of attempts at things like tokenizing real estate and other stuff that just hasn't gone anywhere. And it's tokenization and blockchain has been this like, it's like Ahab's white whale. He's always searching for it. It's the holy grail. You're always looking and you never find it. Like, I get that. It's had a long history of failure, right? And
Right.
I think a lot of that failure was partially due to regulation and making it impossible to really put the things that could be valuable. Putting a house on the blockchain, I don't know. Maybe there's some value to that, and in the real estate market, I'm not sure. But I know that if you lose your cryptographic keys, God doesn't reach his hand out and take your house keys out of your pocket, right?
Yeah.
Like, tokenizing a physical asset it could bring some value. I get it. You're really just improving the record keeping or automating the record keeping of ownership. That could be valuable. I don't think it's like a game changer personally. But equity ownership is by definition intangible, right?
Mm-hmm.
Other things are too, by the way, like intellectual property is an intangible asset. I think personally that these intangible assets could be riper, technologically speaking, for having their ownership and settlement transferred and recorded on a blockchain. I think because they're already digital. I mean, what's the difference between what do you care, Paul, if the DTCC says Fidelity has 1 million shares of Apple and one of them is yours, versus if Fidelity says, well, we're holding the token that is his ownership? To me,
right.
It actually absolutely, public blockchains in particular represent high security record keeping, and that could be very appropriate for equity securities.
Well, and that's interesting. You said the DTCC, because immediately one of the values that I saw with having tokenized assets on these exchanges is the ability to take self-custody and withdraw your tokenized securities from the DTCC.
Right.
Do you think that these exchanges will go that far eventually?
Well, I mean, the way we've designed the tokenized Galaxy stock is that you are self-custodying it.
That's awesome.
Effectively. And I can get more into how we designed that, but yes, I think that's an interesting thing you can do, and stablecoins are similar in a way as well, right? Like, where what you hold is a liability, right, to some issuer. That's what stocks are, right? And so they'll never be like permissionless in the same way that Bitcoin can be, right? Like, because Bitcoin is a liability to no one by definition. It's a digital commodity. Stocks are not digital commodities, right? Like, if and same thing with stable coins, right? If you have a bunch of stable coins, but then I don't know, you're determined to be a murderer or a criminal or whatever it is, the government is going to call up your bank and say, freeze his bank account, and then they're going to call up Circle or Tether if they know your address and say, freeze those coins. Like, they can do that, right? And they can do that with stocks too, right? And
they can do that today as we sit with just digital dollars.
Yeah, and they are doing it today, to be clear. They're doing it on stable coins when the law, I mean, Genius Act puts in some decent, clear requirements that there be like real legal service. Like, they're not supposed to be able to just like willy-nilly call up stablecoin issuers and steal your money, which is, good that they can't, that they shouldn't do that. They should only do it to criminals when legal process has been done. We have a good legal system in the United States, so like, you have to put some faith in that. The same thing's true for stocks. You don't permissionlessly own your stocks, yet you still might prefer to hold whatever it is yourself. And I think that is better. Think about digital dollars today, like, money in a Cash App account is custodial.
Yeah.
Right. It doesn't mean that like a stable coin that you self-custody doesn't have any liability. Sure, it has some, but in my mind, I think it is meaningfully more self-custodied than I was
dollars
thinking, on a screen.
So like when I was in, I don't know if it was after UBS bought PayneWeber or not, but Dole, when Dole went bankrupt and there was like 30% more shares in existence, or 30%, more shares that were claimed in the bankruptcy. And we know today, like naked short selling is an issue. That's obvious. And if people could take self-custody, I wonder if some of those problems, those rehypothecation and naked short selling problems would at least become less prevalent.
I think it's such an interesting point, because the way tokenized Galaxy works is what you're actually doing, if you want to cross this bridge we've created, if we call it a bridge, you are going to your brokerage. You have to already own it to move it, and that makes sense. You're going to your brokerage, and I put this in our paper, a screenshot of me telling my Fidelity, like just chatting with Fidelity.com And I was saying, can you DRS these shares to the transfer agent? And that's literally all you have to say. So it's the direct registration system. It's a mechanism by which you can move shares out of a DTC account and ledger them directly at the transfer agent, meaning the issuer's transfer agent. So, for example, so that would be Galaxy's transfer agent, right? And so what we are doing is we're moving them out of Fidelity's omnibus at the DTC, and instead we're creating an entry for me on Fidelity's own book, on Galaxy's own books and records that says Alex owns it. And this is something that you can do. It's pretty rare because holding stock on the company's records itself is not that useful. It's no longer connected to it's a pain in the ass to do stuff with, right? But it can be done, and companies will do it sometimes. Take this example. If we acquire a company, or if a publicly traded company acquires a company, another company, or employees, and as part of the acquisition pays them in their own stock, right? Oh, we'll buy your company and give you some stock. Well, they don't know the brokerage information of every employee at that acquired company. So what they usually do is just put the stock on their own books and records in their name. And then if that person, that now employee, acquired company, or whomever wants to go get the stock and move it back to Fidelity, they just call up the transfer agent and do that, right? So but to your point about naked short selling, so our process involves moving the shares onto Galaxy's own books and records, and then we've hired a second transfer agent called Superstate, which then can create tokenized versions of the shares. And they're not like wrapped shares. Like basically they're sitting now in your Superstate account, which is one of our transfer agents. And they can say, like, do you want tokens for these? Literally, you can tokenize. And then they watch the Solana blockchain. And as they move around between allow listed addresses, so everyone is KYC that can touch it, then they just update. That's whoever holds the token at any given moment is how they represent our master securities file to the right.
So they can they can trade peer to peer. Can they trade? Can they trade with a new entity that goes through the KYC? And
if you go in KYC, that's right.
Superstate or whatever.
Superstate has to know who you are, because otherwise we can't maintain our own books and records. If you think about it, it's totally logical. But hold on, I want to make this point because we're using this transfer agent thing as the way to get the shares onto the blockchain. One of the only other times that people have moved shares en masse to a transfer agent was GameStop. It was all the GME holders were worried about Fidelity and Schwab and Robinhood and whomever lending out their shares to short sellers. And so they were DRSing their shares to the GameStop transfer agent so they couldn't be used for shorts, right? Gotcha. And that is true. Like, you can't, Fidelity or any brokerage can't borrow my Galaxy stock to lend to a short seller in a margin, if I have a securities lending agreement or whatever, if they're not there. I think it could have an impact there. If the method by which we're tokenizing our stock becomes like widely used,
right?
You could imagine it. It would alter the landscape of just where stocks are held and why. Right now, as we talk here, in September, there's like 66 on-chain holders of our stock, and about $1.1 million worth of Galaxy stock has been tokenized. It's not that much. It's a small, tiny percentage of our float and our owners, right? And that's because you can't do much except for what you said. You can hold it. You can trade it bilaterally, which is not that easy, right? There's a reason why people trade stocks on Nasdaq. It's great, right? I think we're hoping the SEC will give some more clarity and even possibly exemptive relief to allow like decentralized exchange trading. As I mentioned, that's one of my main impetuses for putting stocks on chain, is because I do think a lot of the applications that have been built are brilliant and neutral and transparent in ways that TradFi equity tech stack is not. And so I think some great stuff has been built in crypto. We've just been sort of putting our crypto and things, as President Trump said, we've been playing with these cryptos and things. And gosh, it'd be great if we could play. So I think stablecoins bring a lot of value. If you've ever sent a wire and also used a stablecoin, then you know that stablecoins are much better. And I think, if we can get the quality of assets up on chain, then people will start to see that blockchains are actually, they've been sort of training wheeled with all of these sort of okay assets. Some of the assets are good, really good. I just mean a lot of them are we're just speculative, right? And if we could get better assets in there, then they would be I think you'd see the power of DeFi personally.
Right. And I saw recently that Nasdaq made an investment in Gemini. which
Yeah, I
is
saw
like
that,
I
and
just these arrows pointing at, okay, Nasdaq's going to become a direct competitor to Coinbase with tokenized securities in addition to
well,
crypto.
because it's not just that; the worlds are converging, right?
Yeah.
Because the Galaxies and Coinbases and Krakens are all trying to move into securities in one way or another, right? Like
Mm-hmm.
we're trying to tokenize securities, as we've talked about, but they're also moving towards crypto. It's kind of like, and there was kind of like this. I don't know if it was a bargain. Obviously, I don't think anyone met in a room or whatever to do this bargain. But it's kind of like crypto gave the sort of crypto native world gave Bitcoin and Ether to Wall Street in the form of ETFs in exchange for higher prices, or they took them, right?
Uh-huh.
That's basically what happened. And now I'm saying, well, we want stocks, and like if you're not going to give them to us, we're gonna. Both sides are pushing in both directions, and I think somewhere it's unclear exactly where this will end up, right? Like, will stock trading look like crypto trading? Will cryptos start trading on the stock market? Like, I mean, because one of the other things that came out was that the SEC clarified, the SEC and CFTC clarified. They said, just in case you didn't know, actually, there's nothing preventing a national securities exchange, i.e., Nasdaq, from trading spot cryptos.
Right.
So you could see a world where you're buying your stocks through Galaxy and Coinbase, and you're buying your Bitcoin on the Nasdaq. Like that's totally possible.
Right.
It's some convergence, and I think both sides have a lot to learn from each other, and so the future is probably somewhere in between. I don't know how close. Like, is Nasdaq going to be able to defend a moat where it's everything they currently do, but somehow there's tokenized stocks? I think doubtful. I think somehow we're going to move towards each other, and I don't know where that point is, but that tussle, I mean, they definitely have things to learn from blockchains, definitely. Yeah. And as I've argued, I think we have things to learn from equities. Like, I mean, I think there's some middle ground to be found.
This last topic on this, or last question on this, and then we'll move on. But I saw somewhere that I think it was the SEC was talking about making some changes or allowing offshore exchanges. So say like some of the like offshore derivatives exchanges like Deribit and others, right? That don't work with US customers. I saw somewhere that they were going to create a pathway for them to register in the United States and therefore allow, like, is that to, like, what would be the purpose of that? I'm trying to understand like why they would want to allow those to register with US customer or for US access. Is it because they want to be able to acquire them someday, or what is the bigger picture
it
there?
was the CFTC and SEC both clarified this. They put out something in early September, an advisory saying that offshore exchanges could serve US clients. Basically, if they register what's it called, as an FBOT. I forget what it's, a foreign board of trade. There's some pathway here. I don't know why. In a way, you'd think that that's creating more competition for onshore entities, ostensibly who the SEC would care most about, and CFTC. I think here's a reason why I think it's good, is that Americans are using offshore platforms already. So, with VPNs or whatever, right?
Yeah, right.
I think one of the big reasons why FTX
and some trading desks have moved offshore to access those.
That's what I'm saying. And so one, you could bring back, you're bringing more products back to Americans, which I think is positive. I think one of the big reasons FTX was such a disaster was that they refused to give clarity to crypto exchanges onshore. So one of them, finally, Sam Bankman-Fried, just said, F it, went offshore, literally like 90 miles offshore, and just did whatever he wanted with no oversight. And Americans used it a lot. And then, of course, he was a thief. And so a lot of Americans got hurt. Whereas if we'd created a pathway, a possible pathway that was palatable enough to even do it all, which there wasn't under Gensler, then maybe businesses would be registered and then they would be overseen, right? And so to me, I sort of think about this similarly. Like, if people are going to be doing it and we can't stop them, then we'd rather have it overseen by our regulators. And so this is a sort of the push and pull of the regulators creating a viable pathway that's actually economic and beneficial business wise for these companies, but also then brings them under a regulatory regime that is designed to protect consumers. So I view it as positive for that reason.
That makes sense. So let's transition to treasury companies, Bitcoin treasury companies, and since the launch of strategy, we've seen now like hundreds and hundreds. I think we're getting close to 1,000 Bitcoin treasury companies. And a lot of different ideas on how they're going to conquer that space, right? So you've got the pure plays, you've got others that are supplementing their slow growth or dying business. And then what we saw recently with Strive, they're acquiring Semler Scientific. And I assume they're on a path to try and acquire more companies that have treasuries. How do you make sense of this whole space? Where do you see it going? Do you see trends there that you think are sustainable, unsustainable? What are your views there?
Yeah, I think there is going to be a great filter where, just like that, famous sci-fi concept and evolutionary concept, where not all of them make it through. And I think, one idea I had originally thought about this was that it was jurisdictional, that there would be, okay, like Metaplanet is unique in Japan, like they have a unique rates environment that makes it uniquely compelling, right? And maybe there's other environments, obviously Michael Saylor has the US locked, he's I don't think he'll ever be passed, right, in the US or anywhere, maybe. And that maybe it was a jurisdictional thing, and that there is something brilliant. There's a lot of things brilliant about the US style corporate form that is like just an incredible vehicle for a variety of things, operating companies, asset allocation, etc. And that, Michael Saylor had pioneered such a fascinating thing, and then maybe there's a regulatory sort of jurisdictional arbitrage to happen, where it's like, well, there'll be a big one in Brazil and Japan and Argentina and Egypt and wherever, right? And some people are pursuing that strategy, and that may yet be a strategy. Michael's now saying that there'll be thousands of these things, and I don't know if he means thousands running the treasury strategy of using debt and equity to grow your Bitcoin per share, or if he just means like, tons of companies are going to have Bitcoin on their balance sheet. That I absolutely agree with.
Right.
I'm not sure the market. I am still skeptical of how many treasury strategy companies the market can bear. I think it's pretty clear that it can bear more than one. I'm not sure if it can bear 100, and I'm not sure where that line is. I do think there is a jurisdictional aspect to it, and I'm just not sure where it is. I think that great filter at some point is going to come, and you're going to see consolidation. I think this is the first this Strive announcement of their intent to acquire Semler, I think, is the first one that I've seen.
That's
but I think it will. Yeah, it will not be the last.
Yeah.
Is
Nakamoto trying to pursue a similar strategy to Strive?
Yeah, I haven't actually heard Strive enunciate this as their strategy.
Okay.
I don't know that it's their strategy.
Okay.
But I have heard Nakamoto specifically enunciate this, that they intend to invest in, and I think maybe even launch digital asset treasury companies, Bitcoin treasury companies all around the world. So I don't know if it'll work. I don't think it's, a more interesting question. And I don't really own these in any meaningful way myself, but I prefer to own Bitcoin, and I own Bitcoin in self custody, and I recommend everybody do that. If like that's the thing Satoshi and the blockchain made possible, right? That is not possible with other assets. We talked about even stablecoins, which you can self custody, can be yanked right out of your, frozen in your wallet, even though your wallet's hidden under the mattress. Bitcoin can't do that. That's a core feature. You don't get that by owning a treasury company share, but you might get other things. And I, like I said, I'm a big proponent of the free market. So I think people should do whatever they want, to be honest, that's legal. And these, of course, are legal. And in fact, from a pure economic standpoint, I think they're quite interesting. I don't know how many are going to survive. So, and like I said, it's more than one, and I would argue less. I think I'll say less than 1,000. I was going to say less than 100, but maybe that's too bearish. I don't think they hurt Bitcoin, I think, is a really interesting question. Do they hurt Bitcoin, right? People on, Crusaders on Twitter are always so hung up on well, if you even say something that's not Bitcoin, then you're misleading the uninformed masses, right? And I'm sorry, but I believe in personal responsibility. I also believe in free speech. So I'm going to say whatever I want, and it's on you to make your own decisions, okay?
Right.
And I think people should disclose and be clear about any conflicts of interest they may have. But in general, I don't believe that talking about a DAT or even talking about other cryptos is something terrible you can't do just because some unknown person might hear what I said and decide to make a decision on their own that ends up being bad for them. We all have the freedom to make decisions that are good and bad. Okay, you're not going to get bailed out. Government shouldn't stop you from making good decisions, and they shouldn't bail you out for making bad decisions. So, and I don't think these are bad. I think they're good for Bitcoin. I think they increase the ownership. They increase the float. Like I said, I prefer to own physical Bitcoin, which I'm going to call it,
right.
the actual Bitcoin. But I also think it's really interesting. I think it's super interesting. It makes the market much more exciting. I think you've got some great evangelists at these companies that are explaining why Bitcoin is great. And I also think it makes the equity environment so interesting. I also think it's inevitable, and it's a pretty good sort of like stress case for other companies that they say, "Hey, look, I don't necessarily want to run the strategy that strategy is running, but I do want to own Bitcoin in my balance sheet, and I'm going to learn from what strategy has done.
Mm-hmm.
How to custody it, how to report it, how to do all the accounting, etc." So like, it's inevitable. I think it's mostly positive, and I think it's actually a good sort of step towards every company owning some Bitcoin.
Do you think any of these guys are moving to become the Goldman Sachs of Bitcoin, to provide banking services, lending, underwriting, or as
Yeah,
it seems to me like if Strategy launched a trading desk and started paying Bitcoin yield, like real yield, like generating yield with their 650,000 Bitcoin or whatever they own,
it seems like they could. I mean, I think that's a really fascinating idea. I haven't seen like really anyone do it. I think we've seen some talk about this, right? That they're going to put their Bitcoin.
It seems like it's just plebs
ways.
like me talking about it. I haven't seen anybody like at the treasury company level talk about it.
I think I have, and I don't want to get wrong who I've seen talk about it publicly, but you've definitely seen some initial statements, sort of like vague statements about how they plan to put their Bitcoin to work. I think some of them have done like options trading strategies, like call overwriting and things like that to generate yield. But you haven't seen that much, and you haven't seen that much talk of it. But I assume you're going to get a pretty interesting diversification out of these. Yeah. Like we talked about Nakamoto versus, they're not just building their own treasury, but they're trying to launch and invest in other treasuries, and that's an interesting differentiator. There will be other, like some of people are going to keep their Bitcoin sitting inert, and others will do something with it. And I love the idea of doing something with it, or acquiring companies and in Bitcoin, or I just think it's super interesting.
Yeah.
And
what do you think about the idea? Like if you get Nasdaq, NYSE, et cetera, starting to trade spot Bitcoin, and you have a company like Strategy that starts now running an option strategy internally, and they're generating Bitcoin yield. What about paying a dividend that's real Bitcoin?
You could do it. I mean, look,
if those pieces come together, you could do that, and you could buy an equity that pays you a Bitcoin dividend.
It's totally possible. I think you're going to see it.
That'd
Saylor's
be amazing.
He's not quite doing that, but with his, stretch and stride and strive and, his preferreds, he's doing something a little bit similar. He's more harvesting volatility than actually using the coins. But I mean, I think you'll see people lend them. I think you'll see people probably wrap them and put them in Ethereum DeFi. I mean, you'll probably see somebody do every
possible thing. All the DeFi stuff is coming to Wall Street.
Yeah, I mean, and I don't, to me, I don't love the idea as a Bitcoiner of somebody wrapping Bitcoin and putting it in ETH. Yeah. But I mean, like, to each their own. Like, I think you're going to see a whole bunch of, you're going to see lending desks sprout up. You're going to see people using it for liquidity and trading, and you're going to see option strategies. You'll probably see DeFi strategies.
So do you think when DeFi makes it to Wall Street, like we're describing right now, do you think that ends poorly, like it has so many times already in crypto space, or do you think that actually gains actual market traction and sticks?
I think it's going to gain traction and stick. I think there'll be hiccups. We've put out a lot of content on this. For example, Thad on my team published a great report, basically open sourcing, not basically, actually open sourcing on GitHub as well, how we assess on-chain risk, including like evaluating smart contracts. And I mean, a lot of bad things have happened on chain and in DeFi, but also look at like Uniswap.
Yeah,
Okay.
right.
Uniswap's been around now since 2020. It's like enormous amount of volume is done there. It's totally decentralized. There's no admin keys that can be used to upgrade it. That's why you have Uni V1, V2, V3. When the team wants to release a new one, they just have to release a whole new one. They don't go back and upgrade. You can still use the old one because it's stuck there on chain forever. It's the same thing. Like, should a Bitcoin treasury company go way off the deep end and do the most risky thing? Probably not. Should like a Wall Street firm allow its clients to go into like a freshly launched DeFi protocol that no one's done diligence on? Probably not, right? Like, so I think anything and everything is possible there. And, we operate on chain and take a lot of steps and do a lot of risk management to make sure that we're safe, right? And that, our funds are safe. So I think, like anything new, there's risk, but I think that there's also best practices that have emerged. And that's what I'm saying. They're not on DeFi in the first year that it's existed. They've let the crypto people, test it out.
Yeah, they've let us stub
time.
our toes for some time.
That's right.
Yeah.
That's right.
All right. I know we're running near the end here, so I want to jump into a few more topics with you. First is the stablecoin, which I agree with you. It's one of the most successful cryptocurrencies in existence. But I'm wondering what your thoughts are on USAT versus USDT.
Mm-hmm. Yeah. So Tether.
Tether onshore, Tether offshore. Are there correlations here to the Eurodollar system at all? Or is this just trying to make a regulatory fit so they don't lose market share and it's no big deal?
Yeah, I think it's primarily the latter. Tether's decision to launch a US focused like entity or whatever we want to call it. And I guess that's what it is. I think, look, it's primarily in reaction to the Genius Act. The Genius Act requires, I think, within 3 years, a digital asset service provider like Galaxy or Coinbase has to delist any non-Genius Act compliant stablecoin. So we have 3 years to before we have to actually get rid of our foreign stablecoin or whatever that's not registered, right? But the Treasury has 1 year to promulgate the rules and 1 year to assess the reciprocity with a foreign jurisdiction. So if Tether, which I believe is now headquartered in El Salvador, ostensibly, if El Salvador passes a stablecoin, overarching stablecoin legal framework that is materially and substantially similar or at par with the Genius Act, the Treasury Secretary could certify that actually that's good enough, and there's reciprocity between the U.S. and El Salvador, in which case Tether wouldn't need a U.S. version to be Genius Act compliant. That is possible. I don't know. They may do that for all I know. I don't know what the stablecoin laws are in El Salvador. My guess is they're not as stringent as Genius in the U.S. So, but clearly they've said maybe eventually they won't need USAT for all we know. But if they don't get that reciprocity, they're faced with two options: stay entirely offshore and do not become a licensed permitted payment stablecoin issuer, PPSI, which is the legal term, or move onshore and become one. And they've taken this sort of third path, which is, well, we'll make one that is onshore that will become one, and who knows what happens with the other one, which they haven't said, right? So I think it's more just about now you can be a non-PPSI quote unquote stablecoin in the US under Genius, but you can't market yourself as a stablecoin. You literally can't say you're a stablecoin. And you can't be used for interbank settlement. And this is important because, people in crypto already have stablecoins, right? Who doesn't have them? Well, everybody else, right? And so like that everybody else, the authors of Genius, and the Treasury, and they envision stablecoins being widely used in the traditional finance system, including between banks, right? So like, why? Sure, Tether might be 180 billion or whatever it is in supply today, but if banks start using stablecoins, there's still a huge opportunity they'd be missing out on if they can't play in the US, right?
Right.
So
yeah, I was
I
thinking
think that's
I was
what
thinking
it's
of this
mostly
in
is.
terms of like, right. They open up USAT because they've got to be compliant and they want to get into bank settlement. They want to get access to the U.S. Financial markets in a big way. But if simultaneously they keep USDT functional in El Salvador with 10% backing in corporates and and Bitcoin and gold. And Saifedean's vision plays out where all of a sudden that offshore USDT has greater purchasing power over the next 10 years than USAT.
Mm-hmm.
Then
Yeah.
like there starts to become this arbitrage. And what would that mean for you if the onshore US dollar was weaker than the offshore US dollar?
It's a very interesting question. It is possible that's possible. I think you're likely going to get very strong convertibility between the two, whether through Tether or just through markets and secondary markets.
Yeah.
Right. There are international players who will be able to buy and trade both. Like, so I'm not that concerned about an actual price dislocation between the two. But it is true that as an offshore issuer, like Tether is accessing markets that with dollars, they're putting dollars in markets abroad that maybe can't otherwise get dollars, right? And that gives them some power for sure. And it impacts, dollarization globally. I would say, look, both like a euro dollar and Tether are offshore dollar liabilities. That's true. But euro dollars are issued by, many banks, and they're backed by many different types of banks' balance sheets, right? And Tether's one, not and actually, say what you will about the transparency of their attestations, but we actually know a lot more about what's backing Tethers than we do about the aggregate asset mix of the hundreds or thousands of banks that are issuing dollar-based liabilities, right? Like, so I think there's almost more transparency with Tether than 100%. There is about like the conglomerated Eurodollar banks, but also those banks could possibly get backstopped by the Fed through swap lines in a time of crisis, whereas Tether will not be. We think, I assume.
We think,
right?
Did you see Luke Gromen said? Did you see what Luke Gromen said recently? He said, "What if in the next crisis, when there's dollar shortages, in order for you to get access to an FX swap, you have to take it in stablecoins?"
Yeah, I mean, it's
then
totally
that
possible.
is just completely funding more treasury sales.
I mean, I think that the Genius Act is a much bigger deal long term and geopolitically than crypto market structure reform. Right?
Yeah, every time I think about it, it seems like
it is a geopolitical
weapon
act. It's a highly subversive one as well. I think it will create a lot of demand for treasuries, but recall these are treasuries, I think 92 days or less in maturity. So this is not going to solve the US's like long bond problem. But
yeah, it's just a Band-Aid.
It's a Band-Aid from the debt side. I think it helps, but really I think the power is, we're saying at a time when the world's countries and trade participants and international corporations are increasingly trying to remove or lower their exposure to U.S. debt and the dollar. We're saying, well, okay, but we're just going to put dollars on the cell phones of every one of your citizens. We're going to make it so easy for everyone to hold dollars that, like, it's going to get around capital controls. Yeah. It's gonna be. I mean, I think you'll enter a place too where we'll have some geopolitical diplomatic deal with some country, and as part of it, in order to do the deal, they'll say, "Hey, stop your stable coins flowing into my country,"
right?
Because they won't be able to stop
or vice versa, right? And that's funny because
or let them in.
I kind of facetiously say, like, if you're a tyrant in a third world country oppressing your people with a horrible currency, you're about to become the division manager of a dollar-based economy.
That's right.
You're going to be the general manager of Dollaristan.
Yep. I think that's right. I think we are it is absolutely a method to dollarize the world. And in that sense, I think it also it extends or helps preserve dollar dominance, right? Which is part of the reason the U.S. government likes it. It's not just that by the debt, it extends and preserves in fact, this is what Secretary Scott Bessent said. He literally said, we are going to maintain and grow U.S. dollar dominance, and we are going to use stablecoins to do that, as a direct quote from him from that crypto roundtable at the White House. So now,
it's really fascinating.
It's not going to solve monetary policy.
No,
I think the value of the dollar will continue to decline precipitously for all of time, regardless of whether it's more widely distributed, right?
Right. Right, exactly right. And it is an interesting bit of pressure being applied at the Fed, though. When you say, okay, well, we could subvert you and we can go directly to stablecoin issuers. We can suppress the yield because they don't care too much about the yield as long as they're making enough money to justify their operations. They'll continue to send these things all over the globe, and we can suppress short-term interest rates through that, and we don't need you. So it is an
Hmm.
interesting bit of pressure I see them putting on the Fed from that perspective.
Yeah, no, you're right.
Okay, so I just wanted to go through this idea that so many people in our space seem to be set on right now, which is the 4-year cycle's over. It's just up forever, and or
It's so funny.
it's
It's
up
such a good
forever, but
question.
now we're linked to the business cycle, right?
Yeah,
And
yeah.
we're no longer linked to the 4 years. So what's your take on that, and what's your research telling you?
I would say I broadly agree that the 4-year cycle, as we talk about it in Bitcoin, is over as it has existed. I actually think it was over the last time. I think we actually, it was more about credit events and macro. Well, first macro that caused Bitcoin to top in 21. Basically, again, specifically the rise in inflation leading to the precipitous rise in rates, which basically killed the whole rally, not just in Bitcoin, but in equities as well, right? And then precipitous credit events in crypto, right? That collapsed the crypto market, culminating with FTX's collapse in November 2022, that actually made it look like it was 4 years again, to be honest.
Mm-hmm.
There was good reason to believe in the 4-year cycle when you talked about you had the booms of euphoric bubbles when it was still a very small asset. Very easy to go from, $3 to $800. That was a massive run for Bitcoin in 2012. That on a market cap basis was still super small, right? Like,
Right.
and so you have the euphoric bubbles and then the halvings and on this cycle. And I think when the relative, decline in net new issuance in Bitcoin was, 50 to 25 coins per block, that meant a lot. That was a big percentage of supply at some points. It's so minimal now. So I don't think the actual supply change from the halving, I don't think will have any material effect on the market in the scheme of things. It has a narrative effect, by the way, which I think is still important. So I don't think that's doing it. I think the bubble on the euphoric side, like, we will go through booms and busts in Bitcoin. There's no doubt still. I don't think you're going to bust nearly as hard. And frankly, I don't think you're going to boom as hard either, because it's a bigger asset class. It takes a lot more money to push around a $2 trillion asset than it does to push around a $100 billion asset, right? So in that sense, I think what cycles we have will look different. And I'm going to agree that the 4-year cycle in Bitcoin is over. Now, to your point about, there will be other cycles. There'll be business cycles. There'll be credit expansions and contractions that affect all assets, right? There will be monetary credit events where people turn to Bitcoin like they turn to gold. And I think we've seen some of those. It's still, I think today Bitcoin trades a bit more still like an investment and a risk asset than a monetary hedge. But a lot of people hold it to hedge against monetary, and that's purely in the eye of the beholder, right? Like gold, it is a commodity asset, a non-cash flow producing, decentralized, scarce asset. So like, gold's trading the way it is because humans want to own it, not because of some fundamental reason, right? Like, humans over thousands of years have determined that gold is a good monetary like asset. And investors today, including primarily foreign central banks, view it as something with monetary value they can hold that is not connected to the Federal Reserve of the United States, right? So I think Bitcoin will trade like that as well. And so, and if it does trade like that, then you could see in times of, monetary profligacy and bad management, you'll see Bitcoin expand. And then in other times, if it trades like that, when, the Fed gets its act together, will that ever happen? Probably not. But if it did, you might see people say, I don't need this Bitcoin thing as much because the dollar is doing well. So there will be cycles. There'll be cycles tied to just risk appetite. There could be cycles tied to credit worthiness of monetary authorities. There could be geopolitical cycles. It could just be the business cycle, right? I think Bitcoin is credibly a pretty large global macro asset, and thus it will ebb and flow in ways that, but I don't think it'll be because of I think most people in the world have heard of Bitcoin, so it won't be the, oh, I just heard about it, that level of euphoria in buying. But most people in the world do not own Bitcoin, and there may be events that cause a whole bunch of people to rush into Bitcoin. There could be events that cause a whole bunch of people to rush out of Bitcoin, right? Like, so it's not immune to that. The same way FX and commodities and equities are not immune to that. So that's sort of my new, I don't know what will cause each of these.
Yeah.
I think, on a day when, we're recording this in September, and as I speak, the Nasdaq is down 0.65% on the day. Bitcoin's trading down 0.9% on the day. Are they related? Well, I don't know.
Right.
I'm not calling on my broker and saying, sell stocks, sell Bitcoin.
Right.
And then tomorrow I'm going to be like, buy stocks, buy Bitcoin. But there are a lot of people who do that. I mean, there are hedge funds that move size. There are huge, huge players in Bitcoin markets today. It's not just the days of, aficionados anymore. So, and some of those huge desks are going to say, sell off some of my risk today or buy risk today. And that's going to include or not include Bitcoin. And so it will trade like risk. It'll trade like other things. You're going to see gold investors. You're going to see bond investors choosing to also have some Bitcoin. It's kind of out of our everyday, person's hands at this point, at this scale that Bitcoin is. Like, I don't know if people realize the scale. It's truly a massive asset. I mean, when you see the chart, or like assetmarketcap.com, and it did actually surpass silver, but now silver's run hard and Bitcoin's stagnating a little. So now it's just below silver. But like, I don't think people grasp that like Bitcoin is basically as valuable as all the silver in the world. Okay.
Yeah, that's pretty amazing
amount of value
in a short period of time.
Oh, yes. And I think it has a lot more to go. Obviously, disclaimer, I own Bitcoin and so does Galaxy, but we're long Bitcoin. Surprise, surprise. But I think it's the cycles we've seen before are over as we know them. And who knows what comes next? It's like at the end of that Tesseract scene in Interstellar when Matthew McConaughey's like, what happens next? And then I don't think we're all gonna, wake up floating near a space station outside Jupiter, but something like it.
Alex, this has been so insightful. Everything, I really appreciate everything you've shared with us today. And thank you for being on our podcast. Let everybody know where they can get more info on you and follow you on socials.
Yeah, thanks, Paul. Great to be here. Enjoy the conversation. Follow me on X, the website formerly known as Twitter. My handle is Intangible Coins. And read our research, galaxy.com/research. You can sign up for a newsletter there. We send one every week. I've never missed a newsletter. I think we're on edition like 200 weeks in a row since I've been at Galaxy. Even on Christmas and on Thanksgiving, we send it every Friday
when you
morning.
Need it most to orange pill your family.
Exactly. So yeah, follow us there. I think you can also, I have a podcast, Galaxy Brains, and follow GLXY Research on X, where we publish a lot of our research as well.
Awesome. Thank you so much, buddy. Come back in the future. We'll love to chat with you again and get updated. And like and subscribe so that we get more great guests like Alex here. Thanks, guys.
So you've heard Bitcoin is the new gold rush by now. As world leaders on all sides have endorsed it as the future of money, and now you're looking to get started, we'll show you how. It's actually easier than you think. First, go to your nearest Byte Federal ATM and turn your cash to coin. Byte Federal has over 1,200 locations around the country with the highest daily limits. Go to our website, bytefederal.com, to find the nearest ATM to you. Log in to any wallet, then create an account, deposit your US cash, and instantly convert it to Bitcoin. That's it. We are the only US manufacturer and operator in the Bitcoin ATM industry, and our US-based live customer service is second to none. Go on, give it a whirl, and don't get left behind. Click the link below.